Heya Cryptozens, it's 10 p.m. Pacific time. My name is Nikodemus, and welcome back to the Crypto Overnighter, where we take a nightly look at the crypto, NFT, and metaverse space. And keep in mind, nothing in this show should ever be considered financial advice. And we're back on a Monday, 10 p.m., January 23rd, 2023. So remember a little while back, there was this big to-do about the DOJ having this big announcement. And then the crypto community freaked out. The price of Bitcoin dropped as crypto Twitter did what crypto Twitter does: speculate. And then crypto Twitter did the other thing that crypto Twitter does. It erupted with derision at the actual announcement as the DOJ announced the arrest of Bitzlato's founder in Miami. And that's because Bitzlato was a small little Russian exchange nobody really paid attention to. I didn't say much at the time because I felt there was more to it. They accused Bitzlato of laundering money for criminals. Now, maybe I've watched too many mob movies, but it makes sense to me that a tiny little exchange nobody's ever heard about is where this serious money gets laundered. News came today that Europol announced that Bitzlato exchanged about 1 billion euros in assets that were linked to criminal activities. The exchange was recently charged by the U.S. for money laundering. Europol said that targeting crypto exchanges is becoming a key priority in their fight against cybercrime. The transactions involved multiple cryptocurrencies like Bitcoin, Dash, and Litecoin, as well as US dollars and Russian rubles. Now, Europol announced that the CEO, financial director, and market director of the company were arrested in Spain. Additionally, one person was arrested in Cyprus and one in the US. These arrests were made after the US DOJ closed the company's platform in Hong Kong and arrested its founder in Miami. Europol conducted house searches in Spain, Cyprus, and Portugal, shut down digital infrastructure in France, seized 18 million euros in cryptocurrency, vehicles, and electronics, and froze 50 million euros of crypto at other exchanges. Last Wednesday, the U.S. Treasury's Financial Crimes Enforcement Network labeled the company as a primary money laundering concern. That usually means that the business is going to be cut off from the global financial system. Europol stated that crime-linked assets represented about 46% of the 2.1 billion euros received by the platform. The co-founder of the cryptocurrency lending platform Nexo, Antony Trenchev, said the company could sue the Bulgarian government for over $1 billion. He also denied that the company is involved in organized crime, money laundering, or terrorist financing. The disagreement between Nexo and Bulgarian authorities became more intense after Trenchev said that he would sue. He said that the company's advisors estimated the damages to be in excess of $1 billion. He also mentioned that the company's plans to list on a stock exchange in the United States had to be delayed because of the harm caused to the company's reputation. The executive of the company said that the raid on their offices by Bulgarian prosecutors were senseless, unnecessary, and some of them were against the law. The incident with Nexo occurred the day before President Rumen Radev was supposed to give a mandate to form a government. Some people believe that a political party called the Democratic Bulgaria, which aims to fight corruption and make legal changes, had a good chance of getting the mandate. It was later reported that many Nexo employees had made donations to Democratic Bulgaria. Some believe that this may have affected the president's decision to give the mandate to form a government to the Bulgarian Socialist Party instead. Trenchev thinks that the timing of the raid on Nexo's offices was a planned move by the prosecution. He also acknowledged knowing the leader of Democratic Bulgaria named Hristo Ivanov, but said he didn't think it was relevant to the situation and that there are only a small number of people in Bulgaria. Trenchev said that individuals are allowed to make donations and that there is no issue with the employees of Nexo who donated to Democratic Bulgaria as long as they reported it to the audit office. Despite the dispute, Trenchev stated that the company still has a strong customer base of 5 million and processes many transactions daily. Nexo recently agreed to pay a penalty of $45 million to the United States and state governments because they were accused of offering crypto lending products without following proper regulations. The chairman of the SEC, Gary Gensler, said that Nexo failed to register its crypto lending product before offering it to the public and did not provide the necessary information to protect investors. He also said that compliance with the regulations is not optional, and companies that do not comply will be held accountable. Nexo admitted the fines and said that they are glad to have resolved the issues through a discussion with the watchdog. The Cardano network experienced a brief outage on Sunday. The stake pool operator, Rick McCracken, explained that an anomaly caused about 50% of the nodes to disconnect and restart. He also stated that the network had mostly recovered. Developers found an error on GitHub, which caused block production to slow down for a short period of time. The problem was caused by a temporary anomaly that made some nodes disconnect from others and restart automatically. The team behind the Cardano blockchain said that this kind of issue was expected and the system worked as it should have. The team behind the blockchain said that the impact of the issue was low and only affected certain nodes. They also said that other nodes were not affected and worked normally. In contrast, last year the Solana network had multiple outages, with the longest one lasting for 2 days. The outages caused concern for the Solana network, which had also experienced previous overloads and had been heavily affected by the bankruptcy of the FTX exchange. However, the Cardano community praised the quick recovery of the network without needing external help and not needing a network restart. Companies, celebrities, and influencers who promote cryptocurrency will have to warn people that investing in it may lead to financial losses. South Africa's Advertising Regulatory Board has released new guidelines that require cryptocurrency advertisements to clearly state the value of the investment can go up or down and may result in a loss of capital. The new directive states that advertisements for crypto must be balanced and easy to understand, and must not make the investment look better than it actually is by using past performance. Influencers and ambassadors can only share factual information and cannot give advice on buying or investing in cryptocurrency or make promises about returns. Crypto companies spent a lot of money on advertising in 2020 and 2021. Some big crypto companies like Crypto.com, Coinbase, and FTX made big commercials that were shown during the Super Bowl on sports teams' uniforms and featuring celebrities like Larry David. Some celebrities who were in crypto ads were later sued when the investments they promoted failed. These celebrities included the aforementioned Larry David, Jimmy Fallon, Kim Kardashian, Floyd Mayweather Jr., and Tom Brady. Now, Larry David was, for example, criticized for being in an ad that encouraged people to invest a lot of money in FTX. Interestingly, in that ad, his character is shown as someone who doesn't believe in new things and does not believe in investing in FTX. He also does not believe in the wheel and the moon landing. Many celebrities and influencers were also paid to promote products on their social media accounts, but they do not always say that they were paid to do it. On a segment of The Tonight Show with Jimmy Fallon, Paris Hilton talked about how much they loved NFTs, that Bored Ape that they bought, but they didn't say that they were given those NFTs as part of a marketing campaign. Chainway has created a tool called Proof of Innocence for Tornado Cash users. This tool allows users to prove that their initial deposits were not from a list of stolen funds without revealing their own address. This tool is used for legitimate users who want to use Tornado Cash but also want to show that they're not a bad actor. The tool is helpful to those who want to maintain their own privacy. Roman Sebanov, a co-founder of Tornado Cash, said that this new tool is a good way to show that you're not a bad actor while still keeping your anonymity. To use the tool, users need to provide a list of wallets that they do not want to be associated with. The tool then uses cryptography to prove that the wallet used to deposit funds is not on that list. So the idea, according to Chainway, is that you can show proof that you're not a hacker because your money didn't come from a tainted source. In a Medium post, Chainway said, quote, "This not only improves the security and trustworthiness of the system, but also helps to protect legitimate users from being associated with illegal activities without sacrificing their privacy." Now, to be sure, this is something you can kind of already do in Tornado Cash. However, that means you have to expose your address. Kind of defeats the purpose of using a security tool. Banks in the European Union will have to treat cryptocurrencies as a high-risk investment, according to a leaked document. This document is a set of proposed amendments to a 2021 package that aims to align EU bank capital rules with international standards. The amendments will be voted on by an EU Parliament's Committee on Economic and Monetary Affairs. The document states that banks should apply a 1,250% risk weight to their crypto holdings until the end of 2024. The Global Banking Organization Basel Committee on Banking Supervision has set a rule that says banks must treat cryptocurrencies as a high-risk investment. This means banks will not be able to gain any leverage and will have to issue €1 of capital for every euro of crypto that they hold. The proposed law states that the current rules do not properly address the risks associated with cryptocurrencies, and it's more important now than ever due to the recent negative developments in the crypto market. The European Commission plans to provide a more detailed legal proposal by the end of 2024, outlining the different risks associated with different cryptocurrencies and requiring banks to disclose their crypto exposure and risk management policies. The proposal will also include requirements for liquidity. In December, the Basel Committee advised banks to treat cryptocurrencies with caution and to limit their unbacked assets like Bitcoin to 1% of their Tier 1 capital, which is considered a measure of a bank's financial strength. So this compromise has been based on one sent in by the Green Party lawmaker Vidi Venesto. If it passes on Tuesday's vote, then it still needs to be passed by their Parliament's 751 members of the EU's Council. Politicians, not the European Central Bank, will decide how much personal information the bank can access if it creates a digital euro. Executive board member of the European Central Bank, Fabio Panetta, said that the bank does not want access to any personal data. He was discussing a digital euro with the European Union's Parliamentary Economic Committee. He said it's up to politicians to decide the balance between privacy and other policy goals, such as preventing money laundering and tax evasion and ensuring compliance with sanctions. The digital euro will probably use private banks as intermediaries to hold digital accounts for users, and they will not have more access than they do now. Politicians will have to decide if the digital euro can be used as a legal currency and if intermediaries will have to distribute it. The digital euro will not be a programmable money that limits users and is the role of central banks to issue money, not the vouchers, according to Panetta. The European Central Bank may not use blockchain technology for the digital euro because it may not be efficient enough to support the needs of 400 million people. That's according to Panetta. The ECB is currently in the middle of its research phase for the digital euro. In October, the European Central Bank will decide if it will proceed to the next phase of development for the digital euro. This will include testing technical solutions and business strategies. The European institutions will decide if a digital euro will be created. The European Commission plans to present a proposal for a digital euro the second quarter of 2023. This proposal will start the legislative process where the European Parliament and Council must agree on a digital euro policy. The New York Department of Financial Services released guidelines for how licensed crypto firms should handle customer assets if they face financial trouble. Superintendent Adrian Harris said that crypto firms and exchanges in New York State must separate their own funds from customers' virtual currency. Crypto firms are only allowed to hold customers' assets for safekeeping. The agreement between the firm and the customer should make it clear that the relationship is for safekeeping and not for lending money. The department also stated that all licensed firms that are holding assets must keep good records and make information about their products and services available to customers. The goal of the guidelines is to ensure the safety of customer assets. The department released these guidelines after some crypto exchanges in the U.S. had financial trouble and filed for bankruptcy. These include FTX, BlockFi, Voyager Digital, and Genesis. Customers of these firms did not get all their money back during the bankruptcy process. In November of 2022, Harris said that the government should have regulations similar to the ones in New York for crypto, specifically referring to the BIT license. The department has also previously released guidance for stablecoins that are backed by US dollars. And speaking of stablecoins, Japan is planning to lift a ban on stablecoins by June of 2023. That's according to the Financial Services Agency. This will allow investors to trade using stablecoins like Tether. A spokesperson for Japan's FSA said that not all foreign stablecoins will be allowed without restriction. only stablecoins that pass safety checks for user protection will be allowed. These checks include ensuring that the foreign issuer is subject to regulations similar to those in Japan and that the underlying assets are protected properly. The authorities stated that it's not clear whether stablecoins like Tether or USDC will be allowed. They added that the FSA will not provide any information about this before a decision is made. Japan's new stablecoin regulations are part of a proposal to update the Payment Services Act of 2022. These new rules were introduced in December of 2022 and aim to establish requirements for electronic payment instruments and create registration procedures. The FSA will accept public comments on the changes to the Payment Services Act until January 31st, 2023. The exact date for the implement of the changes has not been decided yet. The FSA spokesperson said that the law will be put into effect after the public comment period ends and the necessary procedures have been completed. The deadline for enforcement is set for early June. Japan passed a law in June of 2022 that banned foreign stablecoins and required stablecoin issuers to only link their coins to the Japanese yen or another legal tender. The law is expected to take effect in 2023, and it has affected many crypto firms as none of the 31 FSA-registered Japanese exchanges have offered stablecoin operations since. Some big crypto exchanges like Coinbase and Kraken have stopped operations in Japan altogether because of the weak crypto market. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. We'll see you tomorrow night.